Gold prices slipped in India, even as silver exploded upward. But here's the twist. It wasn't the Indian market that started it. It was Washington, D.C., and a few quiet words from the US Federal Reserve that sent ripples all the way to the MCX in Mumbai. Let's unravel the global chain reaction behind India's gold dip and silver rally. Boom! Did you see that? Gold. Silver. Classic market head fake. It all began with uncertainty in the global markets. In the US, economic data started showing cracks, weaker jobs, falling consumer sentiment, and whispers that the Federal Reserve might finally pause or even cut interest rates. That kind of uncertainty usually sends investors running towards safe haven assets like gold. And for a moment, that's exactly what happened. Gold prices shot up on the global charts, breaking through resistance levels near $4,030 and aiming for the $4,150 zone. Flirt with $4,150. But here's where it gets interesting. While gold took a breather, silver started stealing the spotlight. Silver formed what traders call an inverted head and shoulders pattern, a classic bullish setup. When it broke above $49.30, the move was confirmed, and prices sprinted toward $51.40 and beyond. Think of it as a launching pad, a coiled spring ready to explode. Once price broke above the pattern's neckline, it was like a starting gun. Buy signals flashed, traders piled in. Silver rocketed past $49.30, charging towards $51.40 and beyond. In short, globally, the precious metals market was flashing bullish signals, but with a split personality. Gold consolidating, silver surging. Just as the market was buzzing with these moves, a different kind of news came out of Washington. The political drama that had everyone on edge, the threat of a US government shutdown, suddenly vanished. A deal was struck, and a collective sigh of relief echoed through the financial world. That immediate, gut-wrenching fear evaporated. When the political temperature in the US cools down, investors stop hiding. They get bolder. The US dollar, the world's reserve currency, starts to flex its muscles. It gets stronger. US dollar index shooting up, and global gold price dipping in sync. A stronger dollar is often kryptonite for gold. Gold is priced in dollars worldwide, so when the dollar strengthens against other currencies like the rupee, fewer dollars buy the same gold, creating a headwind. Gold needs extra buying power to rise in that environment. Without it, prices feel downward pressure. The calm in Washington strengthened the greenback and put the brakes on gold's rally. The safe haven premium started to leak away, ounce by ounce. This played out on our multi-commodity exchange in India. Global ripple, local impact. December gold futures, once strong, lost their footing. They slipped about rupees 53, settling near 123,860 rupee per 10 grams. Traders saw the global gold cooling and took money off the table. Short-term players sold to lock recent profits. But silver, it didn't get the memo. While gold stumbled, silver was doing the opposite. It was sprinting. On the MCX, silver futures rose by rupees 578, reaching near 155,265 rupee per kilo. This divergence had everyone talking. Silver lives a double life, precious and industrial. It's a store of value like gold, and it's critical for solar panels, 5G technology, electric vehicles. That industrial demand gives silver a solid floor, something gold lacks. The powerful influence of the US dollar cast a long shadow all the way to Dalal Street and the commodity trading floors in India. When the dollar index surged, it changed the math for Indian importers and traders. A stronger dollar makes dollar-denominated assets like gold more expensive in rupee terms. But this time the global price of gold was falling because of the dollar's strength. This created a tug of war. Local traders saw the international price dip, cashed in their chips, and MCX gold futures slipped. It was classic profit-taking, triggered by a clear signal from the world's most important currency. Gold traders went from bullish to cautious. Their hoped-for breakout stalled. Excitement over a Fed pivot was tempered by a resurgent dollar. Global macro trends lift or sink all boats. Even gold is not immune to currency currents. US political stability acted as a temporary anchor on gold's price, forcing traders in Mumbai to recalibrate. Meanwhile, silver danced to a different tune. Industrial demand gave silver a strong narrative. Unlike gold, silver is tied to the global economy and tech. So what you saw in India wasn't random. It was the aftershock of global market psychology. When the dollar strengthened and Washington calmed its chaos, global gold paused. And that ripple reached our MCX screens within hours. Meanwhile, silver, with one foot in the safe haven camp and the other in industry, thrived on both uncertainty and optimism. In other words, the world's financial heartbeat skipped a beat, and the pulse was felt right here in India. A bullish chart breakout attracted momentum traders. They piled in, adding rocket fuel to the rally. Fundamentals plus technicals equals to a perfect storm for silver. So here's the real question. Do you think gold is just resting before its next breakout? Or are we seeing the start of silver's age? Comment below what you think. Is gold about to rebound? Or is silver taking over as the new safe haven king? Don't forget to like, subscribe, and hit the bell, because the next move in gold or silver could start anywhere, and we'll trace it straight to your screen.